we welcome Mr. Vivek Lohia. He's the managing director and chairman for Jupiter Wagons Limited. Mr. Lohia, what a day to have you with us. A circuit limit on the upper side for your stock, a record high, and that's because of the stunning performance that the company has come up with. Net sales up 155% at 753 crores for the quarter gone by. Uh, Quarterly net profit up nearly 4x, 62 crores. EBITDA up 2x, 99 crores. And the stock has given a return of 278% over the last uh, 1 year. Mr. Loya, you would be a very happy man today.
Yeah, thank you and good morning. Uh, yes, and honestly, this is in line with what we have been saying for a long time. So this in this sector, this change was overdue, and we have been seeing this over the last 4 5 years. The government has been consistently focusing on infrastructure, and especially the railway side of the infrastructure. Because as
Right,
you are aware, in today in India, logistics costs are the highest. We are about 14%, and if we want to achieve the 7 trillion, the 10 trillion economy dream, we need to bring it down to single digits. So, and railways is the only instrument through which I believe it's possible because waterways in India has certain
right.
limitations and
Let me
the
just
cost effect. Yeah.
Yeah, let me just give a brief background to our viewers on what Jupiter Wagons does. Uh, in the broader sense, it provides mobility solutions, but in the practical sense, the entire railway universe, which is really ticking very, very strongly on the charts, is the reason why you see this wonderful smile on Mr. Loya's face. The company provides passenger and metro coaches, designs fabricated bogies, uh, offers covered flat hoppers, containers, and special purpose wagons, and has been the lightning rod, if one can say that, for the railway sector. The market capitalization of Jupiter Wagons is something like 9,300 crores, and we've seen the earnings, the trailing 12-month earnings at 170 crores. Let's get down to brass tacks, Mr. Loya. You've had a fantastic quarter. Now tell us, what do you see over the next 2 quarters? How strong is your order book? And where is the company headed for the second half of the financial
Okay. So in terms of order book, today we have a order book of close to about 6,000 odd crores. And primarily of that order book, there is a lot of private sector orders, which are typically they are higher margin and the delivery times are much quicker. So, and if you see our numbers over the last year, we have increased our capacities. So last year we were doing on an average about 300 wagons a month. Today we are doing about close to 600 wagons a month. And our target is that by end of this year, we should be achieving a capacity of close to about 800 wagons. And going forward next year, we want to do on an average about 1,000 wagons a month. Now, on top of this 6,000 order book, uh, again, we are seeing a lot of traction which is there on the private sector. Last quarter itself, we added close to about 1,000 crores of new order books. And this in the next 3 to 6 months, we expect railway to come out with sizable tenders. So from what we understand that railway of the current design of wagons which railway is currently procuring, there's a tender due for about close to 40,000 odd wagons. And on top of that, there is also a global tender which are new design wagons and which we expect a tender of close to about 10,000 odd wagons, and where Jupiter has a strong position because of a partnership with Tata Wagonka. They are also a promoter in Jupiter Wagons, and they are today the leading manufacturers of freight cars in Europe.
Okay, absolutely, Mr. Lohia and Tanya this side. Very good morning. And first of all, many congratulations for the bumper set of numbers. You talked about order book, and Shell just mentioned about the numbers as well. Top line and bottom line growth. I mean, fantastic numbers. Revenue also jumped 155%. So, what really led to this kind of growth, and how do you plan to sustain this kind of growth going forward?
Okay. Morning, Tanya. So, as I have been telling earlier, that this growth was anticipated because the government today is clearly focused on infrastructure, and for the first time, I think after large many number of years, we are seeing a lot of private capital coming into capital goods into infrastructure. So I think that itself also has its own momentum, and there is a sizable tailwind now which is there in this sector, and we don't see any letdown happening in the next at least 3 to 4 years, because the kind of capacities which are going to be building up, and the focus of the government on infrastructure is very clear. And as I've mentioned earlier, that railway is the only instrument through which you can bring India at par with the global economy in terms of a logistics cost. And unless your logistics costs are in control, you cannot strive to become a much larger economy. And on top of that, what besides, wagon is just one part of our portfolio. What we have also added is now the braking system business in Jupiter. We have very strong global partnerships. We are partnered with companies like Daco, with Covis, who are leading manufacturers of brake systems in Europe. Plus, recently the company has acquired Stone India, which was a legacy brake system manufacturer in India. Through NCLT, we acquired this company, and this in turn will help us strengthen our position in the braking business on the freight side. So we will, for the first time in this space, we will be the only manufacturers of wagons who will have our own braking systems. Thus, it will give us sizable backward integration plus strength to grow much further in future.
Okay, absolutely, Mr. Lohia. And let's talk about margins as well. So, operating margin expanded to 12.85% in this quarter, in the June quarter, as compared to 10.17% a year ago. So, of course, it is because of improved product mix and in the introduction of value-added products. But how do you plan to sustain these kind of margins? And what's your outlook, as far as FY24 is concerned?
So I've been very clear that this the margins which we are currently having are very sustainable kind of margins. But obviously in this industry you cannot expect margins in higher double digits. So I think any kind of margins between a 12 to 13% kind of margins is given the quality of our order book. And as I mentioned earlier, our focus is more on the private sector order book. And if you look at today, our order book position, about 60% of our order book is more on the private side rather than the railway order books, which are more generic wagons. Whereas on the private side, you have to do much more newer designs of wagons, which are much more complicated. So definitely the margins are much higher on that side. And plus the new age businesses which we are adding, that further helps us strengthen our margins. And as and when these businesses now will start contributing more and more over the next 3 4 quarters, you will see the impact of margins coming in from these businesses.
Yeah.
Besides that, recently we have got into a MOU with rights for exports of wagon to the global market, and we are very bullish on that business also. In two tenders with the Mozambique Railway as well as with the Zimbabwe Railway, we are already L1 on those tenders, and we expect some order books from there very shortly. So I think that
Right.
will again add to our overall portfolio and to our margins.
So Tanya, talking about margins at about trailing 12-month EBITDA, I'm talking about is 11.61% for Jupiter Wagons, and it is higher by 350 basis points if you look at the average peer margin over Jupiter's rivals. Mr. Lohia, let's try and understand how the business of railways has changed. I ask this question as a skeptic. uh, Mostly stock prices rise when investors or potential investors and traders see an underlying change happening in the industry, and especially the main buyer. In this case, a public sector enterprise, which is the railways. Have you noticed any improvements? Have your inventory days come down? Have your payment schedules improved? Of course, the order flow is there, but orders with backlogs of payments are something that markets are really, really afraid of, money being stuck in working capital or inventory. What has been your experience over the last 2 years? Has there been any improvement at all, or are only we looking at things differently?
Yeah, it's a very good question. So, one thing about Indian Railways, especially on their procurement of rolling stock, that Indian Railways is, I would say, is one of the best paymasters. So if you look at our balance sheet and if you look at our debtor cycle, it is less than a month. Because typically in about 2 to 3 weeks of the supply of wagons, we get our payments from Eastern or from Indian Railways. And besides that, on the inventory side, we are pretty much protected against the commodity cycles, because as you are aware that wagon steel is a major raw material input for us. But however, we have an escalation and a de-escalation contract formula built in all our contracts. So that also isolates ourselves, the industry, against any kind of major price variations which happen. So I think given the strong payment cycle which railway follows, as well as the protection we get on the inventory side, so that part of the business I don't see to be a challenge. It is the bigger challenges I think right now is on growing our infrastructure and catering to the demand which is now coming in.
Right. Mr. Loya, our final question to you. Uh, you have a debt of somewhere like sub 200 crore rupees on your balance sheet. Uh, like I said, possibly the best time that's there for the company's balance sheet and the business plans that you have over the next 5 years, ever since you were established in 1979. Any plans for reducing this debt, or maybe taking higher debt to fund further capacity expansion?
So if you look at our debt numbers, today we are a net debt free company, and most of the we don't have any long term debt. So most of the debt which you are seeing is on the capital side, and our current ratios are also pretty strong. It's 1.6 plus. So debt for us today is not a challenge if you look at. And given the fact that we have such strong cash flows, so in the existing business, even with the expansions which we have in mind, we don't see any requirement in terms of further debt. Yes, but again, we are looking to consolidate the business further. We are looking at more backward integration opportunities. So as and when these kind of opportunities come in, definitely the company may go in for some long-term debts.
Okay, absolutely. And on that wonderful note, thank you so much, Mr. Lohia, for taking the time out and sharing these wonderful insights with us and being with us here on Business Today Television. And all the very best for the coming quarters as well.
Yeah, thank you, thank you.
If you like the video, do like, comment, share and subscribe.